Good evening, everyone. My name is Roberto Arnold. I am the founder and chairman of the Multicultural Business Alliance. I'd like to welcome you today. I will go ahead and pass this off now to Diana Ordaz-Charrington, president of the Multicultural Business Alliance, to kick us off.
Hello, everyone. Thank you, Roberto. Thank you all for being here today. My name is Diana Ordaz-Charrington. I'm the president of the Multicultural Business Alliance, or MBA as we like to call it. On behalf of our entire team, I first of all want to say thank you for being here today and spending your evening with us. We know that you have a lot of things on your plate and you could be anywhere and you're choosing to spend this hour with us. So we really appreciate it. For those of you who may be new to MBA, our mission is to empower and support small business, nonprofits, and government organizations. We understand that no two businesses are alike, even within the same industry, and so we always like to take a personalized approach to tailoring our services to meet the unique needs of your business. Growth doesn't come from a one-size-fits-all strategy, so we're here to make sure that we give you the tools, resources, and insights to help you thrive. Today's event, Building Your Business Credit, is meant to empower you with knowledge as to how and why your business credit is so important. We have a great partner in Liz who not only breaks down the how and the why, but she also strives to make it attainable without feeling overwhelmed or undigestible. So without further delay, it is with great excitement that I introduce you to our partner from US Bank, Liz Da Broy.
Awesome. Thank you so much, Diana. And I'm so happy to be here. So I just want to say welcome to everybody to our business credit training. So today in this session, we will learn the components about business credit, how personal credit can impact your business credit, and how lenders evaluate your credit worthiness. And we can go ahead and start pulling up the slide. That way they could take a look at the presentation. Awesome. My name, as Diana mentioned, is Lizbeth Da Broy. I am representing US Bank as a business access advisor. I am covering the Los Angeles market, and I'm happy to say that I've been with US Bank for almost 13 years. So I have a few years of experience with working with small business owners in different, honestly, different aspects of or areas that they are in their business, from startup businesses to well-established corporations. Our agenda for today, we will be covering a few topics on business, but first of all, we would like to cover understanding different credit types, the impact of business credit reporting, your credit worthiness when you apply for products, and how financial institution looks at that, and the business credit options that are available to business owners. We can go ahead and start off with understanding credit types. So we're going to explore how personal credit can impact your business credit during this topic. So as an entrepreneur, your personal and business credit histories can create opportunities or limit them. So we can go ahead and continue. So why is credit and credit reporting important to my business? When you apply for financing, financial institutions and suppliers will review your business credit history and may review your personal credit history as well. Credit history helps creditors decide whether to extend financing and, if granted, on what terms. To effectively manage debts and obligations to financial institutions and trade creditors, you should understand that business lenders may know about your personal debt. Unpaid personal debt can lead to a business loan denial. Healthy business and personal credit histories help grow and sustain a healthy business. So with this topic here, I just wanted to emphasize so when you're applying for a credit product and you have your business credit established and you're applying for a business credit product, because you are the guarantor, you are the individual that's going to be making the payments, we always will take a look at your personal credit. And although your new, say for instance, your new product, your new business credit product may not fall under your personal credit reporting, we look at your personal credit more to tell us a story about how you've managed your credit. So we want to ensure that you've been making your payments on time. We want to ensure that there aren't any late. And if so, we would like to know the reason behind why there has been a late payment on your personal credit. So I just wanted to bring up that topic because although it is a business credit product and it will report under your business credit, it's still important to ensure that you are focusing on making sure that your personal credit is in good standing as well for your business. So we can go ahead and continue to the next slide. So it takes time for a business to build credit history, just like personal credit. Entrepreneurs often have to assume the responsibility of financing their business, particularly during the startup phase. So a lot of the times when you're starting a business, many of the times, most entrepreneurs will fund it themselves. So therefore, personal credit history is extremely important. However, entrepreneurs should aspire to establish a positive business credit history as they grow so that they can bolster their financing and other opportunities over time. So we're going to discuss this chart, which shows a spectrum of personal and business credit. If your business is new, lenders will review your personal credit history as they decide the terms of financing for your business because they have limited business credit history and credit performance to evaluate. Lenders view your personal credit history as an indicator of how you will likely manage your business finances. Establishing a credit history under the name of your business through a business credit card, for example, may also help you obtain additional credit for your business in the future. As the business grows, business credit history becomes more meaningful. Even so, it is common for entrepreneurs to be required to personally guarantee business loans. So a lot of the times, you may think, well, how do I even start my business credit, right? I'm a new business. How do I even get there? The simplest way is always a business credit card. And for that, as I just mentioned, right, we would take a look as a financial institution, we would do a credit pull on your personal credit to see how the history is on your personal credit. And that'll determine if we will then approve you for a business credit card. And I do want to say, although at times it's like you're starting credit from the very beginning. So you may remember when you first applied for a credit product on the personal side, you may not have gotten approved for a large line. It was probably a lower limit, and that's okay. So the goal is to, you start small, and eventually your business credit will continue to grow, your portfolio will continue to grow, and then you can go ahead and increase either that credit card limit or apply for additional credit for your business. Underwriters may place greater weight. I'm sorry. Sorry. I lost my. Okay, so underwriters may place greater weight on business credit history for larger, more experienced, and well-resourced businesses. However, a business owner's personal credit history remains relevant for most small business financing. So just wanted to add that. And we can go ahead and continue to what is a personal credit score. So your personal credit score, also known as a consumer credit score, is based on information on your personal credit report. So your credit score is a number that helps lenders and creditors determine your credit risk. That is the risk of default. It is common for lenders to use credit scores to help make loan decisions. Lenders may use one or more credit score to help make a lending decision. So sometimes we may be able to, depending on the financial institution you're applying for, but there's 3 different companies that we may pull credit from. One of them is Equifax, TransUnion, and the other one is, I am totally drawing a blank, Equifax, TransUnion, and Experian. Yes. So we'll get into the business credit reporting that we pull as well, but I did want to state those 3. And these scores may predict different types of risks. So lenders may generate the scores themselves based on account history, or use single scores calculated by other companies. Credit scores frequently used are generated by 2 score modeling companies. That's either FICO or VantageScore. The most popular one is going to be your FICO score. FICO and VantageScore are calculated in different ways, but both are usually on the same scale of 300, and the maximum is about an 850 FICO or VantageScore. Components that can impact your personal credit score is going to be your payment history, your outstanding debt, especially the percentage of credit used against the amount offered on revolving credit. So just to give an example about that, if you have a credit card and your limit is, say for instance, $1,000, and you have a balance on that credit card of $1,000 on a regular basis, that may impact your personal credit score. What we always say is the best recommendation is to keep that utilization under 30%. So what does that look like? If your limit is $1,000, try not to exceed keeping a balance of $300 on that credit card or more. And if you do have to, right, you want to focus on paying that down on a monthly basis and try to get that under that 30%. Because if you monitor your credit score, and that could be, you can monitor your credit score either through a banking app or the very popular one is Credit Karma. But sometimes you may log on there and you'll notice, high utilization on a credit card is impacting your score. Also, the length of credit history. So we always recommend, if you've had a credit card for years, right? Say, for instance, the very first credit card that you ever got to begin your credit, we always recommend try not to close out that credit card, because that's the credit product or trade line that's going to have the most history on your credit report. So that can always be a good thing, because history also determines your credit score. How often you apply for credit is also a big factor. So if we notice that you are constantly applying for credit, you're constantly running your credit score, it may look to a financial institution kind of like a threat, right? Like if you're almost like if you're desperate to get new credit. So, try to limit the times that you run your credit. I always say on an annual basis, ideally, you don't want to exceed more than 2 to 3 times of running credit. And sometimes you have to, right? If you're in the process of purchasing a home, or if you're in the process of purchasing a vehicle, sometimes your credit can be ran frequently. That's okay if it's a one-off and there's a story behind that. And what credit products you are using are also very important. So you also want to have a well-versed credit profile. So when we say that, we mean that by don't have balances on all of your credit cards. Try to limit that. And it's always good to have a credit portfolio of, some credit cards, maybe a loan, say for instance, an auto loan, and then some real estate as well, mortgage, if you're able to do that. But always having a well-versed profile says a good story about your personal credit. Now we're going to continue to business credit reporting. So in the last section, we discussed the difference between credit types and how your personal credit can impact your business credit. Now we're going to look at the impact of business credit reporting and how that impact may have on your business. So we will start with personal versus business credit types. So while business credit reports are not all the same, they generally provide the following information. So your business identifying information will be on your business credit report, your business credit history, your business background registration and financial information, and public record information. So unlike personal credit reports, business credit reports are generally available to the public. This means that potential customers, partners, and suppliers can purchase your business credit report from business credit reporting agencies. Business credit reporting agencies may, but are not required to, provide your business with a free business credit report upon your request. So on your personal credit, if somebody wants to, they're curious to see, hey, let me go see so-and-so's credit portfolio and what that looks like, that's not a public record. We can't just request that. You are able to, however, you personally, if you go on annualcreditreport.com, you do have access to a free full credit report once a year, and you can go ahead and request that for yourself. On the business, it is a public record. So again, anybody can go ahead and pull a full credit report for your business. And that is important because, again, just like your personal credit, right? You want to definitely focus on making sure you're building a good profile for your business credit. So we're going to continue to discussing what information does a personal credit report contain. So this list will include examples of what may be on a business credit report. Unlike personal credit reports, which may look different, but they also contain the same basic information, the information on business reports can vary significantly. So the DUNS number, this is going to be a 9-digit number assigned by Dun and Bradstreet to each unique business to help identify the business. So I like to think of this kind of like it runs the same as kind of like your social, right? This is going to help us. It's going to be unique to your business, and it's going to help us identify your business. The NAICS code is the industry classification code. This is going to be a 6-digit code assigned by the census for a different industry type. So each industry and sub-industry has a different code, and financial institutions use this code to determine the risk of an industry. So I always like to emphasize when you are opening up a business account with your financial institution, ensure that you are familiar with what your NAICS code is. And the reason behind that is because if you don't know it, the banker will do their own research and identify your business for you. And sometimes we see this happen a lot with freight companies. We can just do a general search and get a general code that's going to list you as a freight company, right? Or a trucking company. But it doesn't specify exactly what you're transporting. If it's medical equipment, it doesn't give us a specification. So at times, we may see that as a high-risk industry, but it's because we just have the wrong code identifying your business. So it's always good as a business owner to know exactly what your code is. You want to be able to provide that to the banker because this can factor into any credit requests in the future, and if we extend credit to you or not. So that's always important. And you can also, that's also if you just search NAICS code, you can generate one for yourself, and you can even list on the search engine. You could be very specific to find exactly what your industry type is. Affiliations, so organizations or memberships with which the business is affiliated with. And then uniform commercial code, this is going to be a comprehensive set of laws governing all commercial transactions in the United States. So this chart you can go ahead and read through, but we did go ahead and discuss some of the main topics on here. But even on the public record information, they can also pull any lawsuits, liens, and judgments on the business. Business registrations, where you're registered, in which state, city, county corps, and things of that nature. So we can go ahead and continue to the major players in business reporting. So there are 3 well-known business credit reporting agencies that we're going to cover. One is Dun & Bradstreet, Equifax Business, and Experian Business. So very similar to TransUnion, Equifax, and oh my goodness, why do I keep forgetting that third one? We refresh my Experian. I'm sorry, Experian, TransUnion, and Equifax. This is going to be very similar. We have Dun & Bradstreet, Equifax Business, and Experian Business. So while much of the data they collect may overlap, these agencies focus on slightly different aspects of business when preparing their business credit reports. So for example, Dun & Bradstreet focuses solely on business credit with an emphasis on how your business interacts with its vendors and suppliers, known as trade credit performance. So something that I wanted to address, if you have a vendor that you constantly purchase from, or a supplier that you're constantly purchasing from, if you say, for instance, there's a month where your business may be seasonal and you couldn't keep up with the payments, talk to them. A lot of the times they have more flexible payment terms. That way it doesn't impact your credit. So let them know, just be transparent. Hey, is there any way that we can adjust this month's payment? Can we do a deferred payment? And it's really important, especially when businesses are seasonal, to just, be transparent with your vendors and suppliers. You don't want that to impact that late payment, to impact your credit. And it could also impact how others do business with you in the future. Equifax Business is going to compile business credit reports with a focus on small businesses' experience with business lines of credit and loans from banks and non-banks. Experian Business focuses on bank and non-bank lender data. So vendor and supplier data and information in public records. So Experian Business does kind of cover a little bit of both, right? Of what Equifax and Dun & Bradstreet will contain, in addition to information on any public records. So that's going to be any liens, lawsuits, and things we discussed on the previous slide. So we are going to go ahead and continue to the other credit reporting agencies that are available. So there's PayNet. PayNet has a proprietary database of small business leases, loans, and lines of credit that it sells to banks and non-banks. So although entrepreneurs cannot order their own PayNet business credit reports directly, if you are denied financing by a company that uses these reports, PayNet will give you a free copy upon request. So if you happen to apply for a product and they utilize PayNet, you will be notified and they will extend you the opportunity to request a free copy of that report. LexisNexis offers a business credit report to lenders making small business loans using credit data from the Small Business Financial Exchange combined with non-traditional data from LexisNexis. So a lot of the times, financial institutions may utilize LexisNexis to gather credit data, so from other financial exchange organizations. So the SBA as well contains a wealth of information on business credit reporting. So you can visit sba.gov. And they also do provide information on other credit reporting agencies for business as well. So we can go ahead and continue to checking your business credit. So each reporting agency has their own method for evaluating your business credit score, and therefore your score will vary between reports. So as we've discussed, it's also important to thoroughly review the data anytime you receive your business credit report. You'll want to be sure everything is accurate and request corrections if you find any errors. And I want to just emphasize how important this is, even on the personal credit. Whenever you apply for personal credit, or if you're managing your credit through one of the apps, as we mentioned, for instance, Credit Karma, or through your financial institution, it's always good to ensure that you're looking at it, I would say, at a minimum monthly basis, to make sure that the accounts that are appearing on your credit report are accurately yours, and that the information that's being provided on there as well is accurate. It is important to check your business credit report once a year. So an annual credit report does not apply to businesses. So there's no free credit report every 12 months. So like I mentioned, on a personal credit, you can request a free full report for your personal credit. On business, there's usually a fee associated with requesting a credit report. So there's two ways that you can obtain a copy of your business credit report. So one of them is to apply and pay for your business credit report from one of the three main agencies. So the fees from each agency, it's going to be different. So it just depends on which one you're pulling it from. And you can individually check on their website as well to see what the fees are. Or use an alternative credit service to access a free business credit report. So each of the bureaus have subscription plans for business risk and credit monitoring service. Dun & Bradstreet for a business credit report, credit risk score, paydex score, financial stress score, and industry payment benchmarks. You can register for a DUNS number, which will list you in their company database and sets up a credit file for you. And then for Experian, so in addition to your business credit score, this report will also include your financial stability risk rating, your payment summary, collection summary, and other core information regarding your business finances. That's going to be with Experian. With Equifax, so for access to a single business credit report, this report will include your company profile, credit summary, public records, and risk scores. So you can consider which one you would like to go ahead and request it from. But those are the 3 companies that you can go ahead and generate that information from. So our next topic is going to talk about establishing business credit. And why should I establish business credit? So business credit reports help identities receive the report, determine whether under what terms and criteria to work with your business. A good business credit history might give you a competitive advantage. So different types of groups. There's different groups that may look at this information. So lenders, for instance, we utilize credit reports to help determine approval in terms of financing. So that's going to mean at what term are we going to be able to lend to you, and most importantly, at what interest rate. So if you have a excellent credit score, you may be able to qualify for a more competitive and a better rate. Suppliers and shipping companies, they're going to they use your credit report to decide whether to grant a deferral of payments of goods or services. So as I mentioned earlier, when you're working with a supplier, if you have good credit, they're able to have more flexible terms of repayment for you. So they could be, if you're a seasonal business, they could be deferred payments, or even, seasonal payments based on when your business is generating income. Your customers even. So they determine if your company is a legal entity. So a lot of the times, right, if customers want to do business with you, they can actually pull up this information and see if you're legal. Insurance companies, they're going to help determine the price of your insurance policies. I think right now this is extremely important. It's another way of kind of like lenders, right? You'll get a better interest rate if you're managing your credit score effectively. It's the same with insurance companies. They like to take a look at that as well. And procurement officers, this helps determine how they evaluate your ability to execute government contracts. So if you are right now with, the Olympics coming in 2028, if you are looking for procurement opportunities, this is a really, really good time to put some focus on your credit reporting for your business, because they definitely take a look at that to ensure that they can execute contracts for you. So we can go ahead and continue. And give me 1 second because I just lost. There you go. So having strong personal and business credit histories can support the growth and sustainability of an emerging small business. So for example, a strong credit history is going to allow access to financing to start or expand a business. It's going to enable acquisitions and financing of raw materials and inventory. It allows investment in equipment, materials, vehicles, and other market opportunities. It facilitates borrowing money to help businesses address working capital shortfalls. So, for example, a business may use a line of credit to accumulate inventory for an upcoming sales season or to fill a large order. You may want to check out the business credit report of your suppliers, shipping companies, or customers. This can provide you with valuable information, yet many small business owners don't run credit reports on potential business partners. So I wanted to talk a little bit about that. And it's always a very uncomfortable topic, but when you are going into business with a business partner, we see this happen so much where you are both 50-50 owners, and one person has excellent credit and the other person doesn't have the best credit. And you go into the bank and you apply for a product and it gets turned down. And unfortunately, although that one person has excellent credit, a lot of the times it's a very uncomfortable conversation to have, but it's one that has to happen, right? So it's almost like when you're getting married, you have to have that uncomfortable conversation about finances, because it's going to impact, if you're able to purchase a home in the future, purchase a car, what your finances are going to look like. It's the same when you're going into a partnership with another business owner. You want to ensure that their credit is just as good as yours is, because it's whenever you apply for a credit product, if there is an owner and they own 20% or more of that company, they have to be on the credit application. So it's always an uncomfortable conversation, but one that has to be done and made, because it's definitely going to determine if you are extended credit in the future for your business. So I just wanted to emphasize on that. And we can go ahead and continue on. How do we establish business credit? So to start the process of building credit history for a business, you need to obtain an EIN from the IRS. So you may need an EIN to do business with different entities. If you wish to do business with the US government, you should also obtain a DUNS number. So that can be done through Dun & Bradstreet. So that's www.dnb.com. You can register for a DUNS number for free on the DNB website. Through one, though one may already be out there, you can check the DNB website to make sure there's not one already out there for your business. Next, if you already have open credit accounts or trade credit for your business, find out if you already have a business credit history by searching for by searching for your company name on the website of each of the business credit reporting agencies. If your business is listed, request a report to see what information has been reported and make sure that everything is accurate. If your business does not have a listing with the business credit reporting agencies, ask your lenders, suppliers, and vendors if they will start reporting to the business credit reporting agencies, or consider establishing a relationship with those you already know that do so. Great places to establish credit. So your bank, as I mentioned before, the simplest way is always a credit card. Keep day job when applying where possible. So the reason we say that is because we will, whenever there's a credit application made, we always consider your income. So if it's a startup business, you may not be generating any income for your business yet. So if you have a day job, you can definitely include that as well. Most financial institutions will ask for accessible income. So if you are married and you have access to your spouse's income, or if you're receiving rental income, you can include that in your application as well. Net 30 accounts. Many vendors offer net 30-day payment options and can report your on-time payments to credit reporting agencies. So this is always a good way to also start establishing some credit. Many don't check personal credit reports, though they may. Some may require the buyer to make several on-time payments before they extend net 30-day terms. Once you have records established at one or more of the business credit reporting agencies, you can build your business credit history by updating or correcting your information, including figures from your annual financial statements. And we can go ahead and... So now we've explored the impact of business credit reporting on your business and the 3 well-known business credit reporting agencies. Next, we will discuss how lenders evaluate your credit worthiness and look a little more closely on how that ties together with the reporting agencies. So we're going to talk about the 5 C's of credit. So to take the appropriate level of risk and ensure loan repayment, lenders will follow core strategies that are reflected in their policies. These principles are known as the 5 C's of credit. So that is your capacity, your collateral, credit history, conditions, and character, and are used to determine the overall credit worthiness of potential borrowers. We'll focus on discussing our discussion on these principles today. So capacity. What is capacity? This is going to be the cash flow that the business needs to demonstrate it can repay a loan. Lenders want to know what revenues you will use to repay the loan and whether those are documented in your financial statements and tax returns. Collateral is a form of security you provide the lender by pledging an asset you own or your business owns, such as equipment or your inventory, and agreeing it will be the source of repayment if you cannot repay the loan. When you default on a loan that involves collateral, the lender has a right to foreclose or repossess the asset used as collateral. Most lenders view seizing collateral as undesirable and therefore evaluate the adequacy of cash flow carefully to avoid it. So, usually, whenever we do a credit application, the best way would be what we consider an unsecured loan, and usually that's considered if you have excellent credit, as you know, your financial statements are healthy and they look good. However, if there needs to be collateral involved, that's okay as well. Just ensure that you aren't late, right? Because the last thing that the bank wants to do is repossess or take any of that collateral, because it definitely impacts your credit. Credit history, this is going to refer to the credit performance of the owners and the business. So if you see on there, you have two categories: personal credit and business credit. So lenders evaluate information obtained from personal and business credit, as well as internal financial institutions' information, such as performance on accounts that the owners and businesses currently have. They consider information such as credit scores, inquiries, and credit utilization, as well as delinquency and some public records. So I also wanted to add on here, if you have a bank account and it's been closed because, overdraft fees, and you just, didn't repay it back, you let it close out with a balance owed to the bank. Although that might not fall under your credit reporting, that falls under your financial history. So they can definitely take a look at that, and it could impact your credit history as well. Conditions involve a variety of qualitative and quantitative measures, including the conditions of the loan. So, how will you use the money to expand or purchase equipment or inventory? Local industry and economic conditions as a competition of your that your business faces of all could affect your financial projections and ability to repay. So, for conditions, whenever you apply for a credit product, you just want to be very specific as to what you're using the funds for, what you intend to utilize the funds for, because this is going to allow us to be able to understand why we should be able to extend credit to you and your business. And character, this is really going to refer to the qualitative measures such as your personal integrity. So this is going to be your business reputation, and references provided by your customers, vendors, past lenders, and other business partners, and possibly including your social media reputation and online customer reviews. Character is also reflected in your credit history and in your business's credit history as well. So, non-traditional data. So, in a consumer context, the term non-traditional data, sometimes called alternative data, generally refers to information about how you have handled financial obligations not traditionally reported to credit reporting agencies, such as utilities, phone, and rental payments. In the business context, non-traditional data may include payment transactions through payment processing, intermediaries, shipment, volume, e-commerce trade, and merchant account transactions. Most business lending in the United States today still relies on traditional credit underwriting. However, as the lending marketplace evolves, the role of non-traditional data in accessing credit risk may change. Alternative data is not currently as prevalent as traditional data. Okay, so what is a good business credit score? So a strong business credit score can help you get favorable payment terms from any of your business's suppliers by showing you reliably pay your bills. You might be able to convince your suppliers to offer more comfortable terms. So factors that impact your business credit score, very much like personal, is going to be your time in business, your payment history, your credit mix. So as I mentioned before, credit cards, loans, and maybe, say for instance, if you own the commercial space where your business is, credit utilization ratio. So that's going to be, again, going back to how much of your credit that is available to you are you utilizing. and mistakes on your credit report. If, say, for instance, maybe a company, marked you as having a late payment when you have proof that you didn't make a late payment and it was made on time. Or say, for instance, there is a new credit trade on your credit reporting that you did not apply for. You always want to ensure that you're monitoring that closely. So we're going to go ahead and move on to business credit options. So we just wrapped up on how lenders evaluate your creditworthiness and reviewed how it ties together with the three main reporting agencies. Now our final little bit is on business credit options. It is important to know what are your choices, and if you need to obtain business financing. So, as you explore various funding options to help your business grow, there are several places you can look for solutions. So, traditional lending will look at various factors we discussed today to provide lending options for you. You can find funding at your financial institution, or if you like, I can connect you with a U.S. banker to discuss what your options are. There's also community development financial institutions, also known as CDFIs. These are mission-based organizations to expand economic opportunity in low-income communities. These may be banks, credit unions, local funds, or other providers. There are other subsidized resources available as well. So as I mentioned before, there's the U.S. Small Business Administration, also known as the SBA. They offer lending through financial institutions. U.S. Bank is one that offers lending through the SBA as well. The government helps to back up the loan to defray the risk to the lender. That means you could be approved for an SBA loan with traditional financing. So that means you can go into a U.S. bank, apply for one of our credit products, and it be considered for SBA, like it's what we call an SBA guarantee. And then there's also state and local government organizations. So they may offer loans to businesses in the community. You can also seek for grants to fund your business. Grants generally do not need to be repaid, but they may be other qualifications or terms that you need to meet in order to accept the grant. So these can also be competitive as they are limited funds offered by organizations. You can also explore alternative funding sources. So one place to begin as you start your business is through investment from friends and family who believe your business will be successful. They may either gift money to you or loan money that needs to be repaid as the business grows. There's fintech or financial technology companies. They will offer different terms and structure options for your business. There are several fintech companies with a good reputation, but be wary of scams. If it seems too good to be true, proceed with precaution or just speak with your financial, if you don't have one, a banker is always helpful when it comes to things like that. There's crowdfunding. This is going to be a way to garner additional funds through your network community or each person paying a small amount to help you reach your lending goal. And then there's also venture capital or angel investor firms. So these firms can provide a quick infusion of cash to the business, but you will generally have to give up some ownership or control of your company for that cash. There's an incubator or accelerator program. So in the community, accelerators in the community, they're built to help small businesses get started. They are extremely competitive and are often based on the best business plan and are frequently industry focused. So these are some credit or funding resources that are available to small business owners. And with that being said, I just want to say thank you all for attending our business credit or building business credit today. So we discussed the impact of personal credit on your business credit reporting, and how lenders evaluate your credit worthiness. If anybody has any questions, right now is a great time to go ahead and ask. You're welcome to add your questions on the chat. Or if you like, you can go ahead and unmute yourself as well, and feel free to go ahead and ask away.
All right, I'm going to start off. I have a few questions. Thank you so much. That was very informative. But a few questions that I have, and this is on a personal level. Like, I love to check Credit Karma every day, right? I'm just like, I will wake up, I'll check it. It's just something I do to make sure, again, like how you described, making sure there's no inconsistencies in what's being reported, and that I'm on top of it as well. How accurate would you say that those kinds of applications or things are in regards to when you go to Experian, TransUnion, and all those other ways to check your credit?
That's a really, really good question, Diana. So, Credit Karma, as far as the FICO score, may not be as accurate, right? But it's not going to be significantly different. It's going to be maybe a few when we actually run a credit report through Experian, Equifax, or TransUnion. It may be higher, it may be lower. However, it's usually around the same. The thing that I always recommend people to utilize Credit Karma for is, yes, it gives you an idea of where your credit score is, but more than anything, it's the history that you're taking a look at. And sometimes it's almost real time. So impact. So if you pay off a credit card, it's almost like the next day it updates right away and you're able to see your utilization. I use it more for monitoring to make sure that I'm not showing up late on any of my credit cards. The balances on there are actually accurate, right? So if I made a payment on a credit card a month ago and it's still not reflecting on my Credit Karma, I'd be a little worried. But as far as the actual score, just know it's always going to be a few points off. It shouldn't be significantly different, right? It should be around the same ballpark, but it's not going to be the exact same points that we would pull on a full credit report. And that's the same if we pull from Equifax, that always will be different from TransUnion and Experian. It's not always going to be the same score all across the board.
Thank you for that. I have another question as far as NICIS codings go. Again, from personal experience, I understand now how important it is to know your own coding when you go into the bank and set up your account and whatnot. Because previously, when I did this and I had no idea what NAICIS coding was, I went to the bank and they handled it. And you're right, while they're very helpful and whatnot, they use a broad generalization instead of really asking those questions about what exactly are you doing with your business? How does it work? And to no fault of their own, it really should fall to us because it's our business. But when you have no idea, you have no idea. So thank you for touching on that because I don't think enough people really go down into that and speak on it. So I really want to say thank you for making sure that we're all aware of that.
Yeah, of course. And then I'll also share the website on the chat. So if if you're a business owner on here today and you wanted to do some research and find out what your NAICS code is, you're more than welcome to go ahead and visit the website. And like I said, there's a search engine where you can be very specific as to what type of industry you're in, and you should be able to generate a couple of different codes, and you can identify which best suits the business type that you have.
I don't want
This is Rianne. Oh, sorry. Just real quickly, I just wanted to ask on that specifically if yeah, because I had no clue when I went in, so I don't even know what they put me down as. So is there a way to update that like after the fact, or it's
Absolutely.
just whatever it is?
No, absolutely. You can always change that with your bank. Normally, whenever we are applying, usually when it'll be changed is at account opening, or if you are applying for a new credit product, it is the banker's responsibility to verify that that code is still accurate. Um, but if they haven't asked you, you're more than welcome to walk into the bank and just ask them, hey, can you tell me what NAICS code is appearing for my business? And they'll be able to populate that information for you. And if it's incorrect, you want to let them know that they need to have that updated, and you can provide that code yourself as well.
Thank you. That's great.
Yeah, no problem.
I had
Sorry,
another. Go
I
ahead.
have
Go
one
ahead.
more
You're good.
question. Sorry.
That's okay.
So how, so my business is still fairly, fairly new. And so I did get a credit card through my banking institution with the company. But so how, I guess I'm trying to figure out like at what point is it a good idea to like go for, because I just got a credit card specifically to start building the credit.
Okay.
So at what point do you recommend like going for something additional to, like you said, diversify that?
Yeah.
Like what's the timeline look like?
That's a really, really good question. So, just to give you some insight on traditional financial institutions, we usually require that you've had credit established for 2 or more years to apply for additional products like a line of credit or a loan. So I would recommend with a traditional bank, if you are trying to access financing through your financial institution, they're going to require a minimum of 2 years of that credit established. However, CDFIs, as I mentioned before, which are your mission based, some of them may be even a credit union. There's a lot of CDFIs that traditional banks are that we work with as well. They don't require the 2 years in business. They only offer loans. So it could be, you could apply with them for a micro loan if you just want to be more diversified and have a loan, and get started with that for your business. You're more than welcome to do so. And microloans can be as little as $500. But that's just another option for you. You don't have to do that. You could just wait the 2 years, and once you're ready. As far as your credit card, if you wanted to say, for instance, right now you got approved for a lower limit and you wanted to extend that limit so you have a little bit more utilization available for you, I would recommend waiting about 6 months before you rerun your credit for your business, and they can consider extending that line of credit for a larger amount. But like I said, if you're looking to apply for a loan or a line of credit, traditional banks will require a minimum of 2 years. And that's for unsecured. Sometimes some financial institutions, if there's collateral involved, so say for instance, that's going to support business needs, then because there is some collateral, they may only require 1 year. So just talk to your financial institution, and that's why it's important to let them know what you are planning to do with that loan or line of credit, because if there's some collateral involved, usually it's 1 year in with credit established and in business in order to apply for that product. Good question, Rianne. Awesome. Well, I think we answered all the questions that we had today, but if you wanted to reach out to me privately, you're more than welcome to do so. I will on the chat share my personal contact information. And you don't have to be a customer of US Bank. You can also schedule an appointment with one of our bankers if you scan the QR code as well. But I will include my information on the chat just if you have any questions, or if you wanted to get in contact with me directly.
Thank you, Liz. We really appreciate that.
Thank you.
Yes, thank you. Thank you so much to you, Liz, for the presentation and for the insightful knowledge. Thank you to all our attendees. We do want people to know that this is part 2 of a 3-part series. Our next series is going to happen on March 26th in the evening. That one will be in person. We would love to have you all there, so please reach out. I'll also put our contact info in the chat. And I also want to remind everyone that Multicultural Business Alliance also has a YouTube channel. So if you want to just review this information or share it with somebody else that you think will gain insight from it, please feel free to find our YouTube channel, Multicultural Business Alliance. We really appreciate everyone showing up tonight. It was great to spend the evening with you, and we hope that you have a safe evening. I am putting some information in the chat here. Feel free to screenshot it or write it down before we end the chat. But just thank you everyone again for joining us. We appreciate you.
Thank you.
Thank you.
Bye. Thank
Thank you.
you.
Have a good
Bye-bye.
night.
Thank you.